Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we are going to take a look at CYTR. Okay, yeah, this stock has been talked about a lot on stock twits over the weekend and social media. Everybody's kind of freaking out over the big pullback here. It did drop after hours. It closed down at 70 cents in after hours trading, and for us in our chat at mychartcoach.com, and everybody's welcome to come join us. We were totally anticipating the pullback. We thought for sure this was going to pull back. Nobody was loading in our chat. Nobody was buying at these levels. Everyone was patiently waiting for the pullback. And why were we waiting for the pullback? Because we know how to read a chart. Not just one chart, but we can read the weekly chart, the intraday chart, and the daily chart. I'm going to show you all three and why there was no reason to be buying on Friday. Okay, and why you should have just waited patiently for the pullback, and then you'd be in the driver's seat this week, sitting in cash, waiting to play this bounce that's going to be coming, as opposed to trying to buy up at the top and then getting burned on this big pullback on Friday. Okay, so let's get down to business here. Let's look at this CYTR weekly chart. Okay, first clue: why was this going to pull back? Okay, look at the candle. What was the candle that was forming this week? This is a doji. What is a doji form after a multi-week run, multiple white candles in an uptrend? You've got a doji forming above the upper Bollinger Band. What is that telling you? It's telling you bearish doji star. That's the bearish doji star pattern. That is a major reversal pattern. That doji was telling you danger, danger. Dojis at tops equal danger. It signals a pullback is coming. We alerted everyone in our chat that there's a totally bearish pattern forming on the weekly chart, and a lot of people knew about this pattern because earlier in the week I posted an alert on BTCS, a Bitcoin play that formed a bearish doji star during an uptrend, and it pulled back 47% the next day. We alerted everyone in the chat in real time to lock in gains that it was going to pull back, and the next day it was down 50%. Okay, so the big thing here is you've got to learn the patterns. You've got to learn how to read the charts. You've got to learn how to read not only the indicators, but the candlestick patterns. Japanese candlestick patterns are very important. They tell you the psychology behind the trade. This doji right here, this candlestick, this is telling you that there's lots of indecision. Forming above the upper Bollinger Band is a major red flag. The candles always work their way back into the bands. Okay, so now what we're looking at on the weekly chart, if you can see here, the upper Bollinger Band is at 70.2. Or 0.702. The closing price here on Friday for CYTR is at 0.70. So it came back and it pulled back to the upper Bollinger Band. So right now you're looking at an open. If let's say it opened at 70 cents right here at the upper Bollinger Band, the first support level, if it pulls back further, is going to be EMA 4 at 68 basically. And then if you see a big pullback, the huge support level on this chart is this green line, the 50-week moving average at 0.617. That is a must-hold level, and it is the reload level if it pulls back to that level and the share price bounces off of it. So keep an eye on this weekly chart, and if you see a drop below EMA 4, look for a potential bounce play off of this 50 SMA and 8 EMA support level. The 8 EMA is currently at 598 on this chart. So the two of these moving averages are converging, and that's providing a big support level at 60. Notice there is an unfilled gap here between the closing price on the weekly candle here and the low of week from last week. And so we're expecting this gap to fill, but what's going to happen now, it looks like, is there's going to be a gap down. And so now there's going to be, this candle is going to be floating all by itself up here, which could be considered, I mean, it's only one candle, but that does form an island reversal pattern, because what you're going to have here is you're going to have a uptrend, a gap up, a candle forming, and then you're going to have a gap down, and then a potential pullback, because it looks like the market is taking the news negatively that came out on Friday. So now this candle is going to be stranded by itself up here, floating like an island. So now you're looking looking at a potential island reversal pattern, but definitely bearish doji star form this week. We're looking at a potential reload off of 62 if it is tested on the pullback. If you let's go over here to the 15-minute chart. Okay, so we posted this 15-minute chart. We gave everybody on StockTwits and that follows me on Twitter a chance to check out this chart that we had been tracking in our chat. And so this was telling us that there was going to be downside risk, because if you notice here, this is the 15-minute chart. Each candle represents 15 minutes of trading. There's this descending triangle pattern. Notice how it keeps making lower highs, lower highs, lower highs, but it has a consistent horizontal support line here at 80. So what happens when you have this pattern? Once horizontal support breaks, the chart breaks down and you get a big drop. And that happened after hours. So now there's going to be a gap down. Now you're looking at the share price way down here at 70. So it actually dropped below our bottom of the gap target. We were looking for potential, if bad news didn't come out, we were looking for a technical bounce play off of this candle right here, off of 73. We were looking for this gap to fill. This is the top of the gap, and this is the bottom of the gap. We were looking for a drop down to 73, gap to fill, and a potential load off this 200 SMA bottom of the gap zone, and then for a technical bounce play. And that was a really good setup that was setting up. We were just patiently waiting. We were, the people in our chat, we were out back here, and then on this run up on the 30th, and then everybody's been waiting to re-enter. We patiently wait for our plays. We stock our prey, and we wait for the ideal time to enter and the ideal time to exit. Trying not to have your cash tied up for the key is to have your funds tied up for the least amount of time while play is developing. It doesn't always work out perfect, but we try to time it so that you're putting your money to work when there's action on the table. And so what's going on now is we're looking at a gap, right? So all these candles up here, there's going to be a drop now, and you're going to see a open tomorrow likely. I mean, it could rally back. This is all speculation, but if we go by the closing price on Friday, you're looking at an open around 70 down here. And if that happens and the 200 SMA turns into resistance and it can't get back above this level in the bottom of the gap, which is currently the 72 to 73 resistance zone, then you're looking at a drop down here to the 300 SMA at 65. And then that's going to be putting us in this zone with our weekly chart down here at 62. See 65 here. So it's looking like this could get a drop down into the 60s. If you look back here, let's show you. This is our chat here, and if you see here during the trading day, we were alerting our members in our chat that there was a descending triangle pattern formed, and we were looking for the gap to fill and for a pullback, and then we point out the multiple bottoms down here. We were anticipating that it should drop down to fill the gap. We're feeling like this pattern was happening. Everybody was alerted early. If you look here, the alerts were put out here at 11 o'clock. We were talking about this early in the day, 11 o'clock. And then I came out and I gave our followers on StockTwits the heads up here this is actually at 2 o'clock. Notice how now the candles are way up here at 2. So the alert in the chat that this is breaking down was coming to us at 11, and then the alert to the public was at 2. If you want to get that alert early and you want to be in the game and you want to learn how to do this right and you want to save money on your entry and exit points, don't be penny wise and pound foolish. Come pay the $15 to $20 a month. It comes out to 50 cents to 60 cents a day. That's it, 50 freaking cents, and you would have known earlier that you should have exited before this huge drop, before everybody else. We're warning everyone. So basically, for the money that you give the homeless guy every day when you walk down to the freaking grocery store and he's spare changing you and you kick him 50 cents, you could put that into this website and you could be getting real-time alerts in our chat telling you when you need to be getting in and out of some of these plays that are breaking down. Or we put out alerts telling you that the stock's getting ready to run. The bottom line is, if you're not in the chat, you're being penny wise and pound foolish. Don't try to save 50 cents to miss out on the fact that you could have just potentially lost thousands by not being a part of what we have going on. Okay, look at this CYTR daily chart. This is a chart that we put out. Notice here that we've got this gap. Okay, so you've got the gap right here between the low of day here and the high of day here. And so we are looking for the gap fill. Why are we looking for the gap fill? Because in penny land, gaps get filled. That's what happens in penny land. This is a target for the market makers. This is telling them, come back, fill the gap. Look back here, gap right here. See the gap and the uptrend? What happened? It pulled back. What did this wick do? It filled the gap. What is this move right here? This is an echo of this move. Look how this is mirroring this move right here. We're just following history here. The CYTR has a history of filling gaps. It doesn't take a brain surgeon to figure this stuff out. In order to be a good chartist, you have to be a good historian. You have to look back at prior history to see how does this stock behave? How does it perform? How will it possibly perform in the future? And then you have to be a detective and piece it all together. And that's what we do every day. And so now we've got this pullback here. It did rally back. You know, we're trying to warn everybody, don't be trying to catch this falling knife way up here. You've got this gap down here. There's no reason to be buying in the 80s when we know it's dropping down to the 70s, but people don't listen. You can lead a horse to water, but you can't make them drink. You can put out good information, but people aren't going to listen all the time. It's just that, you know, all we can do is put out the information, and everybody has their own trading accounts and has to decide what they're going to do on their own, if they're going to buy, sell, or hold. And all we can do is just keep putting out good information, trying to help you succeed, because that's our goal each day, is to help you succeed. And so now what we're looking at is an open down here at 70. It's going to open down here if it opens at the close on Friday at EMA 13. That's going to be the big support level at 687. If that breaks, now you're talking about a big drop down to the middle Bollinger Band at 572. This would be a really good reload zone if it did drop all the way back here, if support held. You know, not saying that it's necessarily going to drop this low. You know, if it drops below EMA 13, it's going to be a major red flag, and there's going to be a very, very, very good chance the 50s are going to be on deck, and you could see this 50 simple moving average and middle Bollinger Band, and notice you have the 200 and the 100 all down here in this 50 to 57 zone. So this is a really big support zone on a pullback. So yeah, and then now you've got an island cluster gap reversal pattern going, because notice how you've got the island, there was an island down here, cluster gap, and then it reversed, because notice how you have the gap, there's lots of gaps in this chart, but you got this pattern again where you've got a cluster of candles, and then you're going to have a gap down, and many times that signals further downside risk. So yeah, so now we're going to be tracking this bounce play. We're going to be charting it just like we were all last week, and we're going to be patiently waiting for the ideal time to strike. We have a specific strategy on how to enter. When is the exact time that you should be thinking about jumping back in CYTR? If you want to learn our secrets on how we trade, you know, I put it all out there every day, you know, so most of this information, if you've been following me, you already know. But if you want to learn how to play this bounce play, come check out our chat at mychartcoach.com, and please keep watching those videos at our YouTube channel at mychartcoach.com. Thank you.